Hello friends, a very warm welcome to my channel. In this video we are going to analyze Varun Beverages in a very simple, crisp yet comprehensive form. Varun Beverages is one of the largest F&B companies of India and it's going to be a very interesting analysis. If you are new to the channel, please do subscribe and hit the bell icon, and if you have not joined a Telegram channel yet, please do join right now because we discuss lots of interesting news, views and ideas on our Telegram channel as well. Let's get started. Outside US, if you consider, Varun Beverages is the largest franchisee of PepsiCo across the world. So they do manufacturing for them, contract manufacturing, as well as they distribute their products across India. In fact, they have presence in almost 6 countries. They manufacture and distribute carbonated drinks as well as non-carbonated beverages like juices and water. And all these are sold under the trademarks of PepsiCo. They have been associated with the Pepsi company for almost 30 years now, and hence it is a very strong relationship. And going further, they are going on adding territories which are unpenetrated in India, as well as they are adding to their portfolio other countries as well. So totally they have presence in 6 countries, and within India they have presence in 27 states and 7 union territories. They have 31 manufacturing plants in India as well as 6 manufacturing plants outside India. Other than India, they have presence in countries like Nepal, Sri Lanka, Zimbabwe, Zambia, as well as Morocco. Another very important thing to note is in India, 85% of the sales which Pepsi company does is done by Varun Beverages. So in India, they are the market leaders in this segment. Now let's talk about, in brief, about the management of this company. Mr. Ravi Kant Jaipuria is the founder and chairman of the company. He has more than 3 decades of experience in the food and beverages industry in the markets of South Asia as well as Africa. He has won the International Bottler of the Year award in 1997 from PepsiCo, and he is one of the most respected entrepreneur of the business community in South Asia as well as Africa. Now let's discuss in brief the milestones and the history of this company. They started this company in 1995, and in 1996 this company started their operations in Jaipur. In 1999 they expanded their operations to Alwar, Jodhpur and Kosi, and in 2013 they acquired the business of manufacturing and distribution of PepsiCo products in Delhi. In 2015 they added more geographies to their portfolio, which were Uttar Pradesh, Uttarakhand, Himachal Pradesh, Haryana and Union Territory of Chhattisgarh. In 2015 they had an international presence and they started a company in Zimbabwe by the name of Varun Beverages. In 2016 they got listed on the Indian stock exchanges. In 2018 again they added further geographies of Chhattisgarh, Bihar and Jharkhand. So right from the incorporation until now, gradually they have been adding more and more unpenetrated geographies to their portfolio. So in 2018 they started manufacturing and distribution of juices and other products under the Tropicana brand, and in 2018 itself they started a greenfield manufacturing facility in Zimbabwe. In 2019 they further added more geographies to their business, namely Maharashtra, Karnataka, Madhya Pradesh, West and South India sub-territories, and that's how they continued expanding their business right from incorporation till date. So a couple of things have to be observed here. In terms of geography they have been expanding, as well as in terms of the product range, whatever PepsiCo manufactures, they have been adding those products to their own product portfolio as well. So now let's understand the business model of the company in detail. Broadly, you can divide the roles of both these companies, the franchisor and the franchisee, in this way. So Varun Beverages handles the production of the products, they handle the distribution and marketing of the products, they also ensure the logistics and delivery as well as the customer management on behalf of the company. When it comes to marketing, Varun Beverages' role is more to do a kind of push marketing. Now what is push marketing? They try to push the products and get more market share through their dealers and distribution networks by giving them more discount schemes and motivating them to do better every time. Now coming to the side of PepsiCo, which is the main company, their role is to design the product or create a formula of product and get those formulas patented and trademarked. So based on these formulas, Varun Beverages will be producing those products. So along with the product formula, they also consider the product packaging. A lot of research and design gets into the product packaging. Other than this, at a global level, PepsiCo also does branding in the form of advertisements and various digital and physical means. In this way, there is a broad distinction. The main company or the franchisor company, which is PepsiCo, they create a product and they do branding and packaging, and Varun Beverages takes the formula from them, does the manufacturing, distribution, delivery, customer management as well as the push marketing. So in this way, both the companies work together to maximize their revenue and growth. Now to achieve this, in terms of execution, what are the different things does Varun Beverages do? Let's understand in detail. When it comes to manufacturing, they manufacture the product and they also do the bottling of the product. All these happens in their 37 manufacturing facilities. So this is a great infrastructure they have built over a period of time. So after manufacturing, then what happens? The distribution of the product happens. This distribution happens to more than 100 depots which the company has already established. They have more than 2000 primary distributors through which the products are distributed, and all these products are carried in more than 2500 vehicles which the company owns. So in this way, Varun Beverages had a very solid supply chain. Now post distribution, what happens? They have to manage the entire set of customers. They have lakhs of customers across India. They have to maintain the relationship with their customers and also cater to the customers' demand. How does this happen? They have installed more than 8,40,000 coolers in the various outlets in which the products are sold. And as we have discussed, in terms of marketing, the local relationship management and the local demand push management has to be done by Varun Beverages. So to get more and more market share, Varun Beverages has appointed regional specific sales teams. These sales teams have their defined targets, and to meet their targets, they put in more and more effort and maintain relationship with their customers. At a business level, Varun Beverages is also focusing on a couple of things, that is margin expansion as well as the increasing the return ratios. For margin expansion, what are they doing? They are optimizing their product mix. They are including higher margin products which the PepsiCo manufactures in their product portfolio so that their margin becomes more. They are also doing backward integration so that their dependency on outside vendors becomes less and their margins also expand. For the purpose of maximizing their return ratios or increasing their return on capital employed, what is the company doing? They are managing their capital more efficiently. When it comes to capex, they are doing capex in a very calculated manner. When you listen to the con call of the company, the earnings call of the management has a specific formula to decide the capex. When the company is growing by 10% every year, they do a capex equivalent to the depreciation of the company which is done in the previous year. If the company is growing more than 10%, then they double the amount of capex. So like that, they have a scientific way of calculating and doing capex systematically. So this way they are deploying their capital very intelligently to improve their return ratios. In terms of geographical expansion also, as and when more and more volumes increase, the increase in volumes will lead to the expansion in the margins as well as expansion in the return ratios as well. So although the company has a very simple franchise business model, but these are the different things the company does on a day-to-day basis to grow their business as well as to develop PepsiCo as a brand. Now when we talk about the brands, these are the different brands owned by PepsiCo which Varun Beverages is manufacturing and selling in India as well as the other 5 countries other than India. When it comes to the aerated drinks or the soft drinks, all these brands are quite well popular as we use them on a day-to-day basis, like Pepsi, Mountain Dew, Mirinda, 7-Up. Then under the energy drinks category, they have Sting, they have sodas, they have iced tea, then they have juices under the brand name Tropicana. They have also sports drinks and packaged drinking water. They have also started dairy-based products like mango shakes and cold coffees. Now in terms of geographical presence, almost the entire India which you see in blue color is covered by Varun Beverages. Except Ladakh and Andhra Pradesh, almost all the geographies in India are being catered to by Varun Beverages itself. That is why we are saying that they are doing almost 85% of PepsiCo's revenue in India. And wherever you see the Pepsi logo, these are all the locations of their manufacturing plants in India. The other places which you see in the green color, Nepal, Sri Lanka, and a few parts of Africa like Morocco, Zambia and Zimbabwe in green color, these are the other countries other than India which are again owned as a franchisee by Varun Beverages. Now when we talk about revenue by geography, around 19% of their revenue they are getting from the African countries which are Morocco, Zambia and Zimbabwe, and almost 80% of their total revenue comes from India, Sri Lanka and Nepal. A majority of this revenue comes from India only. When you see the revenue by products, the soft drinks constitute about 70% revenue of the company, the juices about 7% and water about 23% of the revenue. So this is a very simple business model of Varun Beverages, but their execution efficiency is the best. That is why they are able to penetrate more geographies and expand their business continuously over a period of time. They have been able to make profits regularly as well as free cash flows. Now let's talk about some industry trends due to which we can see the beverages industry growing in India. So India as such as a country has a very favorable demographic profile. A majority of population in India is in the age group of about 15 to 40, which makes this demography favorable for this kind of a business. Rapid urbanization, a lot of people moving from villages to the cities is also increasing the demand, as well as the consumption in the rural districts is also increasing day by day. Electrification is increasing in different remote areas of India, and this is leading to establishment of different refrigerators in these areas where these kind of beverages can be preserved and sold, because these products have to be sold chilled. Electrification will increase the penetration as well as sales volumes of this products in country like India. Gradually the per capita income of Indians is increasing, as well as people are getting more disposable income, so they are spending more on outside food and beverages. And as a geography also, India is not a cold country, so we have most of the times during the year we have hot weather, so the consumption of beverages in these kind of countries is more. Now let's discuss what are the competitive strengths of this company. In terms of infrastructure, they have 37 manufacturing units which are very efficiently managed. They have a robust supply chain of thousands of distributors and dealers, and they also have a lot of coolers, 8,40,000 coolers already established in India. So this helps to smoothly distribute the products across the country and get enormous amounts of sales volumes. In terms of market share, this company is regularly increasing their market share in India by catering to more and more geographies. And in terms of numbers, if you see, Varun Beverages is catering to almost every sixth person in the world. So by this you can imagine the extent or the number of customers which Varun Beverages is spread across. In terms of cost efficiencies, they are vertically integrated and they are very efficient in their cost structure. That is why they are able to make good margins. And the most important point is the partnership or the franchisee agreement with PepsiCo is almost 3 decades old. So they have a very strong relationship with them, which cannot be replaced by any other company in India or the other 5 countries which this company is operating in. Now what are the growth plans or the growth triggers of this company going forward? They are now diversifying into the food products also, which the PepsiCo manufactures, starting with the Kurkure puff corn, where they are doing a limited amount of capex to test the waters. In the existing products, they are expanding to various geographies which are unpenetrated in India, as well as one by one they are taking up new geographies across the world, the way you can see in Africa. They are trying to optimize their cost and increase their margins, as well as in terms of capacity, they are trying to optimize their utilization of their capacity so that their margins are even more. They are doing regular capex to increase their capacities of productions, and over a period of time their margins as well as the return ratios are growing, which are leading to more profitability for the company. Now this is again a very interesting slide. In terms of market share, in 2017 only 45% of the PepsiCo's revenue in India was contributed by Varun Beverages. Then in 2018 it went up to almost 51%. In 2019 it went to 80%, and now in the recent years it has gone up to even 85%. So almost 85% of the entire revenue which PepsiCo does in India is through Varun Beverages. So by this you can understand the growth of this company and the potential for growth going further. Now when they are doing 85% of the sales of PepsiCo in India, just imagine as and when PepsiCo increases the number of products in India, they will exclusively get the rights of selling these products in almost the entire geographies in India. So by adding more products to their portfolio, they can get enormous amounts of sales volumes in India itself. Now, what are the risks which this company might face? There could be a little cyclicality in demand. Depending on the season the products of this company are consumed, and it could not be a even sales throughout the year. In terms of the business agreement with PepsiCo, in case there is a revision in the agreement and the terms are not favorable for this company, there could be a risk to the business of this company. As the manufacturing of the products of this company involves a lot of water consumption and the packaging involves a lot of plastic, there could be a lot of regulatory compliances which this company has to cater to, and they also have to adhere to a lot of environmental compliances as well, like recycling the water, recycling the packaging material. So they have to be compliant with all the environmental conditions in India as well as in different countries in which this operate. Whenever the company is entering into new geographies or they are adding more new products to their category, there could be a viability risk that the company may or may not be successful in that product or in that geography. A lot of people are getting health conscious these days, so there is a possibility that there could be a trend of Per capita consumption of soft drinks or these kind of drinks reduces over a period of time in India as well as globally. There could be a risk of raw material supply as well as increase in the raw material prices because of the inflation these days. Now, after understanding the business of the company in detail, now let's talk about the financials, starting with the revenue in the last 5 years. Now, when we talk about the financials of this company follows the calendar year. They don't follow the April to March year, they follow the Jan to December year. So, whatever years which we are mentioning here are ending 31st December and not 31st March. So, in the last 5 years, that is from 2017 to 2021, ending 31st December 2021, the company has done a revenue of about 8,800 crores in 2021, which is almost double the revenue in 2017. So, it has grown at a CAGR of almost 22%, which is a very good performance. In terms of sales volume, the sales volume has grown by almost again 20%. So, it's not just the inflation or the increase in prices which has led to the sales volume has also grown by 20% in the last 5 years. In terms of millions of cases, the company has sold almost 569 million cases in 2021. Each case comprises of almost 24 bottles. So, you can do the math how many bottles of beverages this company has sold in 2021. Now, coming to the EBITDA, it has grown slightly less, almost 19% CAGR in the last 5 years. They have done an EBITDA of about 1655 crores in 2021. The EBITDA margins have been kind of flat or they have reduced a bit because of inflation, and they have done about 19% of EBITDA margin in 2021, which was earlier ranging around 20%. The profit after tax margins have rather improved slightly. One of the reasons of increasing the profit after tax margins is their interest costs have also reduced because they have reduced the debt. So, the profit after tax margin has improved from 5.3% in 2017 to almost 8.5% in 2021. But we have to see going further whether these kind of margins at the net profit level are maintained or not. In terms of absolute numbers, the profit after tax has also drastically improved at a CAGR of about 37% in the last 5 years, from 214 crores to about 750 crores in the year 2021. Let's talk about the net worth of the company, which is steadily increasing. The net worth has gone up to almost 4,200 crores in the year 2021. The net debt to equity has gone down, which is a good sign. From 1.3x, the net debt to equity has gone down to 0.7x. So, as and when this goes down, the return ratios will improve, as well as the profitability of the company will improve, and the company will be in a better liquidity position. Coming to the trade payables, they have gone up from about 200 crores to about 700 crores in 2021, but this is in line with the revenue growth. So, there is no red flag in terms of trade payables. The fixed assets have gone up from about 4,000 crores to 6,500 crores in 2019, but from 2019 to 21, the last 3 years, there is no substantial amount of capex done by the company. The inventory levels have gone up from about 400 crores in 2017 to 1400 crores in 2021. So, these have gone up more than the rate at which the revenue is growing. So, this has to be closely watched. Another metric to check this is their inventory days have also increased. This is not a good sign. The inventory days should either be same or they should fall if the working capital management is done more efficiently. So, this has to be closely monitored in terms of working capital management for this company. The trade receivables are more or less in line with the revenue growth. So, there is no problem with a slight increase in the trade receivables for about 200 crores in 2021. And the debtor days are very less. It is just 9 days in 2021, which is a very good sign. So, in terms of working capital management also, there is no problem in debtor days, but the area of concern could be the inventory days for this company. The cash equivalents have steadily increased from about 94 crores to 337 crores in 2021. So, the liquidity position is getting better, the debt is reducing and the cash is increasing. The operating cash flows have also gone up from about 600 crores to about 1200 crores in 2021. The company has always been positive in terms of free cash flows also. They are getting good amount of free cash flows in the last 3 years. You can observe they have been generating from about 400 to 550 crores of free cash flows in the last 3 years on a continuous basis, in spite of the pandemic and all these scenarios. So, strong free cash flow generating companies are always good in terms of investment. The return ratios have also improved. The ROC has gone up from 12% to almost 17 to 18% range in the last 3 years. There's a good news for the shareholders. The company has declared a bonus issue of 1 share for every 2 held in the recent times based on the record date which the company would declare. The remuneration to directors is about 23 crores. The ROE is again good at almost 19%. The dividend yield is less, but still it's a dividend paying company. And the auditors of the company are Volker Chandiok and Company LLP as well as APS and Company LLP. Now let's talk about the shareholding part. The promoters hold about 65% shares in the company. There is good amount of institutional holding in the company. FIIs hold about 21% and DIIs hold about 7%. The public also holds just about 7%. So there is a strong institutional holding in the company, which gives a lot of confidence about the ethics and the corporate governance of the company and also the company's stable performance over the several years. There is no pledge. Now let's talk about the valuations of the company. It's a face value 10 share trading at a current price of somewhere around 750 rupees. In terms of trailing 12 months PE, it is trading at a PE of about 60. The last 5 years median PE was somewhere around 55 and the price to book value is almost 12x. In terms of market cap to sales, it is trading around 5 times and that's why in terms of valuation, it looks slightly expensive as of now. Let's look at a chart. It's a very strong chart in a very strong uptrend. As you can see, every dip is getting bought. So if you like to invest in the company, the levels of somewhere around 600 would be attractive in terms of valuation and in terms of technical support also. So this is about Varun Beverages in a simple, crisp manner. To summarize, let us discuss the thesis and antithesis points of investment. The thesis points are the company is a market leader in India. They own and they sell almost 85% of the revenue of the Pepsi products in India. In terms of financials, the company has very strong financials. They have almost 30 years of relationship, a strong agreement with PepsiCo, which is very difficult to change for any company. In terms of geography, they have penetrated almost every area in India and 5 countries other than India. In terms of products, they are adding more products to their portfolio, which will drastically increase their revenue going forward. Profitability wise, they have always been profitable, making consistent profits and free cash flows, and that's why it looks like a good investment. In terms of antithesis points, the customer preferences may change. As I told you, people are getting more health conscious, so per capita consumption of these products may reduce. It is again a franchise dependent business, so if there is any issue which happens, which generally may not happen because there's nothing wrong happened in the last 30 years, but if in case something happens with an agreement with the parent company, it could drastically impact the business of the company. If there is any revision in the terms of agreement which are adverse to the franchisee, then that could impact the business of Varun Beverages, and in terms of valuations, it is slightly expensive. So this was the analysis of Varun Beverages. I hope you liked the analysis. If you like it, hit the like button and subscribe the channel. If you want me to make videos on your favorite companies, do comment the name of the company in the comments below. I would welcome you to be a part of our Telegram channel as well. Thank you for watching and have a wonderful day.